A short squeeze has never been more likely for EBET as failure to deliver numbers are at all-time highs. So this important short interest metric here is at all-time highs for this stock. We saw 18 million shares fail to deliver in August. For those that don't know, when a stock is shorted, it's basically just borrowed from the investor, and then once that investor acts for those shares back, they have to deliver those shares back. So short sellers must actually deliver those shares back. And we can see here that there are 18 million shares that haven't been delivered back to investors, which really tells you that within the next 60 days, there must be 18 million shares bought, or the SEC will come after the firms and individuals who are shorting the stock and not actually delivering the shares back to the initial shareholder. So you can see it right here that this short interest number has never been higher for the stock. What I'll do in this video is I'll go over some of the fundamentals of this company. I'll go over some of the financials. And at the end of the video, I will give a price prediction based on technical analysis. So with that being said, let's dive a little deeper into the short interest. So like I said, failing to deliver numbers at all-time highs, which really signals that a short squeeze has never been more likely for this company. We can also see that the short borrow fee rate is at 28%. For those that don't know, this short borrow fee rate basically just tells you that short sellers have to pay investors 28%. To actually short the stock. So this is simply telling you, like I said, that this is it's becoming more and more expensive to short the stock, which obviously should kind of make it harder to short the stock, which would obviously be a good thing for current shareholders. Typically, this is anywhere from 0.3 to 3%. So the fact that we're at 28% definitely signals that this stock is a very expensive one to short at this point in time, which could help push the stock higher over the coming weeks. So short interest numbers are very attractive for this stock, and we also, just to give you context, we have 4% of the float sold short. And then just some background on this company for those that don't know. So EBET develops products and operates platforms to provide a real money online gambling experience focused on casinos, sportsbooks, and esports events. So this is obviously a kind of an iGaming company, an online casino, if you will. And then also, it makes sense to be aware of this recent news that came out actually a couple months ago, so not too recent here. On July 26th, the company announced that its board of directors has decided to initiate a process to explore strategic alternatives from the company to maximize the value of EBET's portfolio. So yada yada. This is a bunch of legal talk here, but this basically tells you that the company is looking to be bought by other larger betting companies. So obviously would be a positive for this stock if we did see a merger with a larger betting company, maybe a DraftKings, maybe a BetMGM, so one of those larger companies could come on and actually buy this company. And when you look at the company's cash position, it definitely makes sense why they're kind of trying to get out of the business, because they unfortunately have less than 1 year of cash to kind of fund its operations here. So obviously the company isn't making money, right? So they have to basically spend money to keep the company alive, and they only have about a year's worth of cash left. So that tells you that this company is somewhat desperate and is definitely looking to sell its stake here. And let's go through some of these numbers here. So we can see here that the company is losing about $72 million a year, and they have about $48 million in revenue. They have a price to sales ratio of 0.6, which is actually pretty low. And they also do have a gross profit margin of 42%. So when we take a look at the price to sales relative to peers, it actually ranks out pretty good. So the peer average is about 0.7 in terms of price to sales, which is actually better than most peers. Esports Entertainment Group, though, is kind of the value name of the group though, and trades at a 0.1 times price to sales. So like I said, also the let's just keep moving here. So there's no analyst price targets. There's not much data on this company, right? It's kind of a smaller company, right? So that makes sense. And then the return on equity for this company is not listed. The return on its assets is minus 168%, and the industry is 6%. So underperformance in a lot of these categories here for the stock. And then one thing I wanted to cover before I keep it moving here is we did see some insider buying within the past 6 months from a individual at the company. So he bought about 18,000 shares, which is roughly 10 grand worth. And then we see that there's really 0% ownership from large investors. So institutions own 1.2% to be exact. But at the end of the day, this is really a completely retail heavy name. So we have about 97% of the float is owned by retail shareholders. So 97% of this company is owned by retail traders just like you and me. So what does this tell me? This tells me that we're not really at the whims of the general market, right? So if the S&P 500 goes down a bunch, it's typical that you see large institutional investors sell some of their holdings throughout the market kind of indiscriminately. But that wouldn't really happen here because we're pretty much entirely in this company is pretty much entirely owned by retail traders. So that kind of tells you that we're going to be pretty much pretty much not correlated to the general market. So thought that was interesting. A good example of that is right. Today the market's down, stocks up a bunch, right? And then we could take a look at the valuation a bit deeper. So let's look at some of the growth numbers first. So we can see that the revenue growth for the past year was actually 8%, which it isn't too shabby. Given when you look at the company, it looks like it's at a way worse spot, right? And then we see that the gross profit margin, like I said, is 42%, and we have cash on hand of 4 cents. So roughly half of the market cap is in cash, which definitely does give this company somewhat of a backstop. Like I said, though, their cash runway is running out quickly. But with that being said, we went over all the fundamentals of this company. I'll go over the chart in a second, but I want to go over some retail trading, numbers here. So, or it's really about search volume, right? So, given that 98% of this company is owned by retail traders, we should really be looking at the retail trading search trends. So we can see here that EBET is the 6th most active stock on StockTwits right now. So it's the 6th most talked about stock in aggregate at this point in time, which definitely signals a extreme retail following for this company. And then if we were to take a look at some Google trends, so this shows me the amount of times EBET stock has been looked up on Google. So we can see that we actually reached a high for search volume right when we kind of IPO'd in 2021. So in April of 2021, it was April of 2021 is where we saw search volume kind of top out. And then we actually reached that point almost. So we were at basically 98% of that peak search volume just a couple weeks ago. So retail chatter is almost at all-time highs for this stock, as the stock is much lower and retail chatter is so much more important. As I said, 98%, or I think it's 97.6% of the company is owned by retail traders. Therefore, this search volume is super, super important. So the fact that search volume is super high right now signals to me that retail traders are very interested in the stock, which should help propel shares higher over the coming weeks. So, when we kind of take a look at all those fundamentals, all that short interest data, everything I just said, it does seem as if this company is likely going to be moving higher in terms of the stock price. But with that being said, let's give it a price prediction based on technical analysis. So we crossed above the 50-day moving average and closed 2 daily candles for the first time since January of this year. So we had last done that in January of 2023, this year, as I said. So it's good to see kind of a jump back over the 50-day moving average. What I think happens is we likely see a move up to resistance at around 12 cents, which is where shares had topped out in mid-August. It's also where shares had bottomed in June of this year. Past support acts as new resistance. We saw that here in mid-August. I think we see it again once the stock comes up to about 12 cents. But that's a pretty good jump in terms of share price, right? Given we're trading at roughly 8 cents right now. To be exact, that would be roughly a 45% gain in the stock if we do see that move. So definitely would be a good jump in shares. Definitely do think that is somewhat likely for the stock. It's also worth noting that we've seen a massive jump in volume over the past couple weeks. And this is really crucial because as we've seen prices drop, we've seen volumes be very, very low, right? So prices have dropped and volumes have been low, and now we're seeing volume jump and prices kind of move higher. Anytime you see a jump in volume, which comes after a massive decline in a stock's price, it signals that price trend is likely to reverse. So volume analysis for this company here is definitely telling us that the shares are likely going to turn around here and head to about 12 cents over the coming weeks. So that's what I'm seeing in the chart. That's what I'm seeing when I kind of dive into this company a bit deeper. So with all that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.